the jobs plan, taken as a package, will enhance the net profitability of our corporations.
The vaccination is taking hold, and you're definitely seeing a change in the customer behavior.
Do we think that it is most likely that inflation could go above target a bit temporarily later this year?
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. It's a down day for stocks as market attention shifts to the Fed and whether higher inflation is here to stay. Bitcoin gives up its Tesla-fueled gains as China reiterates its warning on the crypto space. And UBS slashes jobs across its biggest divisions as the chief executive, Ralph Hammers, ramps up the restructuring. So, good morning. Happy Wednesday. We have quite a lot of news out there. We're also getting the European Central Bank saying that the euro area faces elevated and unevenly distributed risks to financial stability. This is the Financial Stability Review. It's just coming out right now. Also saying that there's remarkable exuberance in the markets. Now, these are warnings that we've heard before, but again, still quite striking when we get it from a big central bank. It warns of spillovers from a U.S. equity correction, saying that they could be also substantial. On crypto, the ECB saying that its risks are limited for now. We'll see whether it has any market impact, but certainly always good to hear and heed the warnings from central banks. Now let's get to one of our top market stories. Bitcoin slumping as much as 11% this morning. Now China reiterated that it cannot be used as a form of payment. Our Danny Berger joins us to discuss the latest. Danny, if you look at Bitcoin, I mean, it's never ever dull. And basically the sell-off was accelerated by what the PBOC has said, but they've said this in the past.
Yeah, they have said in the past. And I should just say it is an interesting contrast with those lines from the ECB. I mean, China isn't necessarily warning of any instability here, but the ECB is saying that there's no instability risk. But yeah, they say, you know, it's not a real currency and should not and cannot be used in the market as money. And so when these lines were first published and throughout the next couple hours of trading, we see these very steep declines from Bitcoin. Now, it has backed off somewhat. We did breach a key level, which is the 200-day moving average in Bitcoin when it fell below $40,000. Now, it has just gone be up that amount, so now it's back above its 200-day moving average. And I just bring up this technical analysis because people care a lot when it comes to cryptocurrencies for these momentum indicators, because you can't really trade Bitcoin off of fundamentals. There's no government, there's no earnings, there's nothing like that. So these types of momentum indicators become really important. So the thought among analysts had been, okay, if it dips below 200-day moving average, you get below 40,000, and then that's when losses continue to accelerate. Now, again, they're starting to ease off now, whether that be because of the ECB comments or what have you. But again, we're going to have to keep watching this 200-day moving average to really see the future direction of Bitcoin.
Danny, we heard from Bank of America, Merrill Lynch, the most recent fund manager survey there also had Bitcoin as their most crowded long.
Yeah, they definitely did. It's not the first time, Francine. And often people use this survey to say, OK, these are sort of your contrarian trades. If everybody is long tech, maybe you should be short tech right now. So they say Bitcoin, but I think this time around, when you're talking about a cryptocurrency, this isn't necessarily a contrarian trade. Joe Weisenthal pointed this out as well yesterday, that long Bitcoin has topped the list before. It topped the list in January, and Bitcoin went on to have this gigantic run. So oftentimes it's kind of good for Bitcoin to have a lot of sentiment momentum behind it, again, because it's not something we can trade off fundamentals.
Danny, thanks so much. Our Danny Berger there with the very latest on some of the moves in crypto. Now let's bring in Bloomberg's Joanna Ossinger for more. Joanna, who of course watches everything crypto, or cryptostar over in Asia. Joanna, if you look at Bitcoin today, I mean, are there any key levels that you would be watching out for?
Well, in addition to the 200-day moving average that Danny pointed out, you do have just the 40,000 level straight. But then you even have 30,000, which some people are talking about now. And that seems crazy, but it is still a volatile asset class. And even though volatility has been declining as crypto matures generally, you've got to watch for 30,000. But then there are some people saying that it could hit all-time highs by the end of the year. So there are still people who are talking about, say, 65,000, 75,000 by the end of the year. And obviously that wouldn't be too soon, but really this space right around 39,000, 40,000 is key as to where it's going to go moving forward.
Joanna, Bitcoin has lost, of course, almost all of its gains since Tesla announced its investment early February. Can you actually walk us through what's happened in that time? You've been following it very closely, and it seems that it almost moves on the back of news that's at some, at certain instances not news.
Right. Well, it did take a huge jump from about 39,000 to 44,000 when Tesla disclosed that it had bought $1.5 billion of Bitcoin. And of course, moved up from there. A lot of enthusiasm about whether other corporations would get involved, enthusiasm about Elon Musk being so gung-ho about it, and whether that would bring more maturity to the asset class. So Musk has really helped drive this. And now it has gone back to that level, basically. So you went from 39,000 to almost 65,000. And there are other things in the middle of it. But there's a lot to say for this kind of having been a Musk rally in a way. And now it's back down to that level. And of course, it's still up in the past year. I mean, this is not something where if you've been in for a year, you're down now. It's had tremendous gains. But it does, if you bought at that 65,000 level, you wouldn't be too happy right now.
Joanna, what's the relationship right now between China, the Chinese central bank, and cryptos in general? I know there was also, this Chinese yuan or virtual yuan that we were talking about, which didn't excite the minds of people as much as they thought it would.
Right. So the digital yuan is in test mode, and it's pretty well along the way to operating. They've done real world tests with it and everything, and there are a lot of people saying that it actually could exist alongside cryptocurrencies, that China might not worry too much about having something like Bitcoin if the digital yuan is able to deal with some of the things that they would like it to. But at the same time, this statement, and it was something on the PBOC website, or the WeChat that was from industry groups. So it wasn't the PBOC saying it per se, but it dovetails with what's been said since 2017 with the cautions about crypto. It's a reminder that China is looking at this stuff. They don't want too much speculation. And so they're keeping an eye. And since China is such a key part from mining and everything in the crypto ecosystem, it has gotten people nervous again.
Joanna, thank you so much, as always, for all of your insight. Joanna Ossinger there joining us today. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Russia is dialing back reports of a major breakthrough on the nuclear deal with Iran. A senior diplomat says that while significant progress has been made, unresolved issues still remain. He was earlier quoted by the BBC as saying an important announcement could be made today, but later said more time was needed to finalize the agreement. Fighting between Israel and Hamas is continuing. The death toll is now at least 217 people in the Gaza Strip and 12 in Israel. Diplomatic efforts to stop the conflict are also intensifying. Israel's Channel 12 reports that Hamas has agreed to an Egyptian proposal for a ceasefire that would start on Thursday morning, but there's been no response yet from Israel. Today, France is easing more of its lockdown restrictions. One of the most anticipated measures is the opening of terraces for cafes and restaurants. Non-essential shops will also be allowed a limited number of customers. France's vaccinations are picking up, and it's now given around 30 million shots. The world's top vaccine maker says it sees export delays until the end of next year. The Serum Institute of India says it's struggling to supply its home country, currently overwhelmed by the pandemic. It hopes to start delivering vaccines to poorer nations through the COVAX scheme by the end of the year. It's a major setback for the nations who were relying on those jabs. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. The mind wanders. I could see us actually having a coffee on the Parisian terrace as it reopens today. Our Leanne Gerrans. Now, crypto is not real currency. The statement by China's PBOC was enough to send Bitcoin below $40,000. We discuss the digital token next with Geoffrey Yu of BNY Mellon. And if you want to join our conversation, please do so. IB plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the European Central Bank says the euro area faces elevated and unevenly distributed risks to financial stability. In its financial stability review, the ECB says there's a remarkable exuberance in markets. Now, it also warns of spillovers from a U.S. equity correction, saying that they could be substantial. On crypto, the ECB says that its risks are limited for now. Now, let's get straight on crypto, saying, well, the PBOC saying it's not a real currency. That was a statement by the Chinese central bank. The PBOC has warned against the speculative use of what they call virtual currencies. This comes as China's own digital yuan fails to impress early users at a trial in Shenzhen. Well, the PBOC's words were enough to send Bitcoin below $40,000. The digital token has erased all gains since February the 8th, the day that Elon Musk announced that Tesla would use corporate cash to buy the digital asset and accept it as a form of payment for its vehicle, something he since reversed. Joining us now to talk everything markets is Geoffrey Yu, BNY Mellon Senior Strategist for EMEA Markets. Jeff, I need to start with Bitcoin because it's unclear exactly what the market saw in the PBOC comments that made them really sell off.
Well, to be honest, the fact that markets were pinning on China to allow Bitcoin to proliferate is just incredulous, right? So there are many reasons perhaps to buy Bitcoin, but hinging on China to allow Bitcoin up ahead, I mean, come on, right? So the PBOC, really, they started DCEP, their own version of the digital renminbi, to counter Bitcoin. They've been waging war against cryptocurrencies, ICOs, for several years now. So to actually now suddenly realize, oh, China might not allow this, to be frank, it feels like a bit more of an excuse to get out for whatever other reason.
Right, and this was a little bit like when we saw that tweet by Elon Musk saying, oh, guys, it's not green. You know, many people knew it for a long time. So what exactly, what does Bitcoin become? Does it become, you know, just the predecessor of something that's more green and more stable? Or is cryptocurrency and, you know, these cryptocurrencies in general just going to be very, very volatile and unpredictable?
Sure. There are two things here. Firstly, Bitcoin is what it isn't. And what I mean there is Bitcoin is not fiat currency controlled by central banks. You know, that was one of the foundational principles, and that will always be there. And to much of the market, and we're listening to clients espouse this view as well. If you want an alternative store of value, a medium of exchange, which is independent of what we use conventionally, then fair enough, right? But that it is what it isn't, if you know what I mean. And the other fact of it is it's going to be highly susceptible to swings in monetary policy. So the other thing to bear in mind is the direction of US real rates, or whatever you think of the pace, is probably higher at this point, and that will affect quote unquote alternatives across the board. So it's really going to react to these two factors.
Yeah, so let's talk a little bit about FOMC and actually the minutes a little bit later on, Geoffrey. This is, you know, the big thing that we'll actually see, and this will give us an indication first of inflation and exactly what we should be looking for from the minutes later to see whether they're still with the stance of wait and see. Is there anything that would make you change your mind, or that you think would make the Fed's mind change?
So to be honest, for the time being, perhaps not, because we've had some strong inflation prints already. We saw the CPI numbers and the PPI numbers. There have been some other prints, such as non-farm payrolls, and which are on the other side of the equation. I guess the only thing we want to see at this point is the variation in opinion. So how much internal debate was there within the FOMC? So fine, they're not ready to advance with their policy anytime in the near future, but the more they're talking about it, that in itself is enough to inject volatility into the debate, and I think it's something the markets should be wary about. But I think on balance, they're just going to take it as easy as possible at this point and just allow the data to play itself out.
Could we be importing, and this is, you know, the oldest question in the book, could we be importing inflation from China, or is that far-fetched at this point?
I'm actually inclined to take the other side of that view because, you know, one chart I track quite religiously is basically iron ore prices. So iron ore so far seems to be ignoring everything that China's throwing at its property market, right? So, but already, if you listen to China's language, it is actually very conservative on growth at this point. So if China is going to actually slow a bit, and Beijing is saying this outright, and demand is not going to be as strong, then the conventional drivers shift. So China actually might not exactly be exporting disinflation, but certainly it's not going to be a source of inflation that we counted on in the past, and particularly in commodity markets. Are they peaking around these levels? fundamentals. I think how China grows in the next 6 months, that's going to be a big part of the story.
Geoffrey, how do you view commodities in general? So we're not in the super cycle, although sometimes it feels like it.
Well, again, two aspects there similar to what we mentioned about Bitcoin. So the first is, of course, growth. Where do you see commodities up ahead in the context of global growth? We have a recovery this year, stronger PPI numbers, CPI numbers, input costs, and also the supply issues. That is the short term. But over the medium to longer term, what is the direction of US real rates? If US real rates are only going to go higher over, let's say, a 1 to 3 year horizon, then that's going to be a much more challenging outlook and for commodity prices, especially if you consider what China's growth trajectory is doing.
Geoffrey, what do you make of what we heard from the ECB? I mean, they're warning about possible financial stability because of some of correction in the markets or some asset price movements. Is this going to be in the next couple of quarters, or is it something that we start worrying about in the next 6-7 months and beyond?
I think it's the next 6-7 months and beyond. But the bigger question is, what do you do about it, right? So every single central bank, so almost every single central bank, if you go through their statements, you see this in Scandinavia, you see this in Australia and in New Zealand. They're worrying about financial stability, house prices, and the SMB, for example, that's often mentioned in the context of Switzerland. But again, what do you do about it? And the only central bank that is doing something about it or has something imposed upon it is the RBNZ, a house price mandate, right? So that's one thing I'm interested in. Is this going to become a political issue like house prices in the UK? And then conversely, we're going to see governments tell central banks, you need to help deal with this as well. And in the end, if they can't do macroprudential measures, like in Sweden, there's only one blunt force instrument left, which is rate hikes. And there we're going to go into very dangerous territory. So expect this to be talked about a lot. But again, only one central bank is doing something about it right now, which is in New Zealand. I don't see any other central bank doing anything anytime soon, to be honest. They really want to steer away from this.
What should investors or market participants do about it?
Well, they have to anticipate whether there's going to be regulation. So again, if we look at the UK, 2 or 3 things which actually did dampen the housing market over the last 10 years or so. One, of course, is the interest rate cycle. But secondly, the tax changes under Chancellor Osborne, right? So which really affected investment demand in the buy-to-let market. And that was a major drag for quite some time. So now we're seeing supply constraints and demand pick up. But over the medium, longer term, I think that investors, not just in real estate, but financial markets in general, be it crypto or other alternatives, you need to look at regulation, because regulation is where, and central banks would prefer that the regulatory bodies deal with this. They start to tamp down on trading activity, maybe taxation, and a combination of issues. So one, it can help redistribute, so gain tax from it and help pay for other public services. But on the other hand, if they're genuinely worried about financial stability risks, then it needs a comprehensive effort between regulators, governments, and also central banks. So this will come over time. It's going to be a long-term theme, as you say.
Great, Geoffrey, thanks so much. Geoffrey Yu there of Bank of New York at Mellon stays with us. And coming up, Andrew Bailey says that the UK should prepare for a temporary surge in inflation. Up next, we continue our conversation with Geoffrey Yu of BNY Mellon. If you want to take part in the conversation, just IB us. You can IB me directly or go on to IB Plus TV Go. This is Bloomberg.
Do we think that it is most likely that inflation, which we put into the report 10 days ago, we think could go above target a bit temporarily later this year for these base effects? Do we think it'll come back towards target or not? Now, our judgment at the moment is that it will.
Well, that was Andrew Bailey, Bank of England governor, giving his outlook on inflation before the House of Lords Economic Affairs Committee. Let's get back to Geoffrey Yu of Bank of New York Mellon. Jeff, when you look at what we heard from the Bank of England, we also heard from someone from the MPC saying that actually now they have negative rates, or they'll have negative rates in their toolbox from August. What's the path forward from the Bank of England?
Well, the path forward, I think, is only risks to the upside, upward revisions to their forecasts. I mean, it may be tweaking the APF and the pace of it, for example. So that was already flagged in the last decision as well. And we saw the RPI numbers are released earlier today. So clearly demand is picking up. But on the flip side, as the BOE also highlighted, it's about wages at the end. And it's not just the BOE or G10 central banks. They want to see wages return on a sustained basis. And that's the one thing the BOE really just doesn't have confidence in right now.
Geoffrey, very quickly, what's your level on pound from here end?
So still like cable just marginally higher at this point. I think we can shift towards a broader, maybe 143, 145 kind of a range. And as a clearer exit is signaled, of course, the dollar will be part of the story as well. Sterling right now sort of neutrally held in terms of markets. But as demand really starts to recover, that's where the positivity comes from.
Geoffrey, thanks so much. Geoffrey Yu there, BNY Mellon Senior Strategist for EMEA Markets. Now, coming up, we look at banking. UBS slashing jobs across its business in its latest drive to cut costs. This is Bloomberg. It's a down day for stocks as market attention shifts to the Fed and whether higher inflation is here to stay. Bitcoin gives up its Tesla-fueled gains as China reiterates its warning on the crypto space. And UBS slashes jobs across its biggest divisions as the chief executive, Ralph Hammers, ramps up the restructuring. Well, good morning, everyone, and welcome to Bloomberg Surveillance, the early edition. I'm Francine Lacqua here in London. Now, UBS slashing its headcount as a Swiss bank attempts to save $1 billion over the next 3 years. The chief executive, Ralph Hammers, is looking to cut costs during his first year on the job, rolling out a digital strategy across the business. Now, most of the cuts are expected to fall in Switzerland, where as many as 700 positions are expected to be axed. Joining us now is Patrick Winters, Bloomberg's finance reporter in Zurich. Good morning, Patrick. So what parts of UBS are these cuts actually going to be focused on?
Good morning. Well, the immediate cuts are happening in wealth management and in the investment bank. But over 3 years, about 700 positions are going to be gone in Switzerland alone. And these job cuts are a first wave, but more reductions are expected over the next 3 years as the bank rolls out its digital strategy. And I think this is, probably one of the first signs that Ralph Hammers, UBS's CEO, is revealing about his new strategy. And until now, it's mostly been broad brush comments about digitization and becoming more agile. But these, I think, are the first signs of what's to come seeping through.
So how does this play, Patrick, into the strategic plan for the new chief executive?
I think it's a very tough one. Ralph Hammers has to see where he wants to cut costs and which strata of the cost structure he decides to go for. UBS has actually been net adding jobs in recent years, but obviously it's a company in a high-paying industry, banking in a high-cost country, Switzerland, and there are literally hundreds of employees on six-figure salaries at UBS, and the high costs have been the subject of analyst gripes over the years. So it'll be interesting to see exactly which parts of the business Hammers decides to pull back on. Also, what type of employee? Is it cutting junior employees, ADs, directors or lower, or even going for the MDs and GMDs, the global managing directors? At UBS, it's a quirk of the Swiss bank. They even have a rank above managing director for about 100 employees called the global managing director. And I think these guys even have a private gym in Zurich, just to give you a sense of the cost. So it's a question of what will Hammers tackle first and how much resistance will he face as he tries to implement his strategy.
Patrick, when you look at, so this is cost-cutting exercise, which a lot of the banks need. How do they grow from here? So where do they want to focus on? And again, how will the strategy change compared to the previous chief executive?
One of the issues here for Hammers is that UBS is an oil tanker, but its strategy has been working. And Emotti, the predecessor of Hammers, set up a strategy based around wealth management, and that basically works. And the last couple of quarters have shown that asset prices have been rising. That means UBS manages more assets for wealthy people, and they're making very decent profits. So while you can take out costs, you don't want to ruin the main business of the bank, which is working well. And then in terms of investment banking, they also don't want to miss out on some of the market-based volatility, which has been driving revenues at competitors in Europe and also in the US.
Patrick, thanks so much. Patrick Winters there, Bloomberg's finance reporter in Zurich, covering the Swiss banks. Now, sticking with banking in the U.S., two women are moving ahead in the race to succeed Jamie Dimon at the helm of JP Morgan. Marianne Lake and Jennifer Pibsack are seen as strong contenders following yesterday's leadership overhaul. Now, the bank named them co-heads of its giant consumer and community banking division. Joining us now is Bloomberg Opinion's finance columnist, Elisa Martinuzzi. Elisa, first of all, congratulations on a wonderful column that came out, which I really enjoyed reading. I urge everyone to go out on the terminal or also on our website and read Elisa's column. We have two women now at the top of the succession race at JP Morgan. What do we actually know about them?
Well, I think what's interesting is that this time it does feel that, the clock is now ticking on this race. Jamie Dimon, famously deflects, the question of when he might step down, typically by saying, he's going to stay there at least another 5 years. But I think having set up these two very likely candidates in the race, the way he's done by placing them at the helm of the very big unit, as you say, does indicate that maybe that succession race is now actually happening. Now, what we know is that, they've both been with the bank, many years. Potentially, one of them, Marianne Lake, a little bit more established than Jennifer Pibsack, Marianne having been the CFO for 7 years before Jennifer Pibsack took over that position, has established herself, very credibly within the financial community. Jennifer Pibsack only in that role for 2 years, maybe less so, and now both at co-heads of the consumer and community banking unit means that they'll both get a shot at this potential top job.
Yeah, Daniel Pinto also, of course, now, sole president of the bank. Does it just show, given the moves that we saw, that Jamie Dimon is really now, actively looking for a successor?
I think so. I think, Daniel Pinto is seen more as the person who would take over, if something were to happen now, sort of in the immediate term, to Jamie Dimon. He, of course, stepped in alongside his other co-president at the time, Gordon Smith, to run JP Morgan last year for a little while when Jamie Dimon was off on sick leave. And so he's obviously shown that he can do that, and he did that at one of the most stressful times in financial services, of course, as the pandemic hit. But I think he's clearly established now, potentially a 3 or a 4-pronged race with the new CFO also potentially, being able to establish himself, within, a few years as a potential successor.
Overall, Elisa, I know you've been working a lot on columns, looking at the future of the workplace and banking, about hot desking. How do you think that the pandemic will change and shift the way that bankers do their job?
I think that's still an unresolved question. I think, there's those who are, expecting there to be a lot more flexibility, particularly some of the European banks, with a lot more remote work. The U.S. banks tend to, giving the message that they're expecting most people to come back after the pandemic eases. I think there will be a lot of trial and error. There's obviously going to be an adjustment, and it's difficult to tell how easy it's going to be to run a very large organization if many people are working remotely many days of the week. But I think the message that perhaps hours have become far too long for too many people and the overwork. I think that's certainly a message that is being picked up by financial services, and be it introducing sabbaticals or more flexible work. I think we'll see a lot more sensitivity to that.
Elisa, the other big story in banking, and there are many big stories in banking today, but you and I have been following, of course, what happened between Andrea Orcel and Santander, now Mr. Orcel being the UniCredit chief executive officer. Today, we understand that they're both in court, a procedure in him, basically saying that he did have a contract and he's owed quite a lot of money by the Santander chair. How do you think that will pan out? Is it too early to say? Could it be damaging, actually, for his reputation and UniCredit?
It is obviously a very awkward situation to be in. He's been in the job just a few weeks at UniCredit, and to be in court, with a claim against an employer with whom you've had a really quite brutal, discussion with is quite unusual. I think it's early to tell. Obviously, some of these, might get resolved out of court. There's a hearing, as I understand, today. But up until the judge's judgment, which could be months away, there is an opportunity for an agreement out of court. So I think it's one to watch.
Thank you so much, as always, our Bloomberg Opinion finance columnist, Elisa Martinuzzi, for all of her wisdom and insight. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Russia is dialing back reports of a major breakthrough on the nuclear deal with Iran. A senior diplomat says that while significant progress has been made, unresolved issues still remain. He was earlier quoted by the BBC as saying an important announcement could be made today, but later said more time was needed to finalize the agreement. Fighting between Israel and Hamas is continuing. The death toll is now at least 217 people in the Gaza Strip and 12 in Israel. Diplomatic efforts to stop the conflict are also intensifying. Israel's Channel 12 reports that Hamas has agreed to an Egyptian proposal for a ceasefire that would start on Thursday morning, but there's been no response yet from Israel. President Biden is planning a 2-week delay for a ban on new investments in certain Chinese companies. Sources tell Bloomberg that officials are drafting guidance to clarify the Trump-era policy that confused Wall Street. The main question mark is over how the China investment ban applies to subsidiaries. Here in the UK, Prime Minister Boris Johnson is fleshing out his plans to level up the UK. He wants to spend £830 million on transforming local town centres. He also plans to shift 3,000 civil service jobs out of London by 2025, including to Edinburgh and Belfast. Johnson says he wants to seize the opportunity to build back better from the pandemic. And finally, today, France is easing more of its lockdown restrictions. One of the most anticipated measures is the reopening of terraces for cafes and restaurants. Non-essential shops will also be allowing a limited number of customers. France's vaccinations are also picking up, and it's now given around 30 million shots. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, crypto is not real currency. The statement by China's PBOC was enough to send Bitcoin below $40,000. In the past few minutes, the ECB says it risks to financial stability are limited for now. Up next, we discuss crypto with our Danny Berger. This is Bloomberg.
The president is concerned that China is far ahead of us in the electric vehicle market, and instead of producing the technologies of the future, we're importing them from somewhere else. It is time for that to shift around. So the president has an American jobs plan where he's looking to invest more than $170 billion, and he's going to build out the electric charging stations that we need for consumers to buy these vehicles and feel confident that they can get where they want to go and back again. He's looking at actually providing consumer rebates at the point of sale. He's looking for low interest loans, grants, and other opportunities to work with battery manufacturing so that we steal that supply chain back to the United States again instead of ceding it to other countries. And he's looking at opportunities to continue to advance, not just in the electric vehicle sector, but in other sectors, to show that the United States, following this pandemic, we are going to not ask for sacrifice for our people. We're going to design a plan that gets our people right in the mix of the best union jobs that they can have, and we're going to grow those jobs, and we're going to grab the manufacturing sector back again right here in the United States.
The president's plan calls for $700 billion in infrastructure improvements, including the electric car charging structure, which you mentioned.
Yep.
But there is no legislation at this point moving through Congress to get the necessary funding and regulations for this plan. What is the administration doing about that?
Well, there are actually a number of pieces of legislation that looks to support parts of the American Jobs Plan. But the president really wanted to put together this $2 trillion plan to show that we are actually going to be back on track to capture the future again. He wants an investment that's right-sized for this moment, a once-in-a-generation investment, and that's what this represents. It's not only just looking at electric charging stations, it's looking at making the transmission grid system work so renewable energy is available all across the United States. It's investment in our water and our wastewater infrastructure. It's going to repair roads and bridges. It's going to look at the kind of investments in America that you expect a president to make who cares about people and knows that it's not about sacrifice, it's about hope and opportunity that this moment brings. And he's going to capture it. So you're absolutely right. There's numbers of pieces of legislation over there that have not passed, but he's sitting. Even today, we have folks sitting together, Democrats and Republicans, looking at what we can put together in a bipartisan way to move this plan forward. But this president has made it very clear that this plan needs to be bold, it needs to be big, and it needs to meet this moment in time.
But if Republicans were a bit sort of not that excited about the jobs plan, the reaction was a bit muted. At what point then does the president move forward with Democrats in the majority with his plan?
Well, the point is not now. The point right now is to work with Republicans as best we can, and then the president will make a decision on what to do next. But I think we all know that President Biden has been in office for a long time, working across the aisle. He's hoping to do that once again, but he's not going to wait forever.
Well, that was the White House National Climate Advisor Gina McCarthy speaking exclusively to Bloomberg's Emily Chang about President Biden's climate agenda. Now let's get to one of our top market stories. Again, Bitcoin slumping as much as 11% this morning. China reiterating that it cannot be used as a form of payment. Our Danny Berger joins us to discuss all of this. Danny, the warning from China seemed to kick off steeper losses, but it's actually no surprise that they once again said this.
Yeah, exactly. This isn't really new information coming out from China. Maybe it is just sort of a reminder to the market that China is watching this. They are on top of this when they issue this via WeChat. So you do see steep losses. I have to say that $40,000 level one is one that's very closely watched when it comes to Bitcoin. You know, it's this kind of sentimentally traded cryptocurrency. And so that threshold there is one we've been flirting with. It did drop below it earlier this morning. Now we're back up above $40,000. So I think this is going to be a really interesting one to watch if throughout the day it can keep above this level. Now, not only is it keeping above $40,000, it's also keeping above the 200-day moving average, which is this purple line here. Again, this is another momentum signal. If bearish momentum really builds to the downside, that's something that can get a lot worse from here. One interesting thing, though, about this level is around back here in February is when we get the announcement from Elon Musk that they'll take Bitcoin as payment for Tesla. And now we're back at that level before that even happened. But you know, you have China, you have Elon Musk dictating Bitcoin. But besides that, it really is these momentum signals that are so important for the cryptocurrency because there are no fundamentals to really trade on.
Yeah, Danny, another thing that you brought to our attention is that Bank of America's most recent fund manager survey also had Bitcoin as their most crowded long.
Yeah, they did. And it's interesting to see, okay, so maybe this is kind of the more institutional perspective that has Bitcoin as their most crowded long. But Vonda Research, which tracks retail data from a variety of exchanges, said that there are signs that retail investors have started to capitulate as well. So it probably is not great if you get both of these communities starting to turn on Bitcoin. I should say, though, we have seen this top the most crowded list before, Francine.
Danny, thank you so much. Danny Berger there with everything going on in crypto. Now, coming up, the chip crisis is worsening as lead times climb to their highest level in 4 years, further complicating the global economy's recovery from the coronavirus pandemic. We'll have more on that next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the semiconductor crisis is going from bad to worse as manufacturers get more desperate to secure supply, while the gap between ordering a chip and taking delivery increased to 17 weeks in April. That is the longest wait since 2017, when the data first started being tracked. Now, for more on all of this is Bloomberg's Asia tech reporter Debbie Wu, who joins us. Debbie, first of all, how is Taiwan's semiconductor industry actually coping with the latest virus outbreak and worsening water shortage?
So most Taiwanese chip makers' plants are located outside of the areas that have been heavily hit by a surge in locally transmitted cases. So they are relatively okay. But the issue is that they may face further water shortage problems as well, and then need to tighten their water usage, as the traditional rain season in May has brought very little rain so far. But so far, TSMC, which dominates the production of advanced chips, and then a significant portion of auto chips, said that their operations remain normal, and it will still be okay should the government ask some local companies to adopt stricter water-saving measures starting the 1st of June. So I think by now, people are really hoping that Taiwan will be getting some rain soon, and that the government can flatten the curve pretty soon.
Yeah. So, Debbie, what are the government and companies actually doing to make sure that they can avoid disruption in chip production amid this new surge in local COVID cases?
So the Taiwanese government has issued guidelines for company operations to minimize infection risks. And they are asking companies to adopt various measures, including setting up a virus response task force to monitor latest developments. And then they are asking companies to control the flow of staff and visitors, and tightening controls on the movement of their migrant workers. And TSMC is having its workers operate in separate teams so that staff on different teams won't meet each other. And then the company has also canceled face-to-face meetings. And then non-essential vendors are now banned from TSMC's facilities.
Understood. Debbie, thank you so much. Debbie Wu there, Bloomberg's Asia tech reporter, and of course, we'll continue watching this very, very closely. Now, also, the European Central Bank says that the euro area faces elevated and unevenly distributed risks to financial stability. In its financial stability review, the ECB this morning saying that there is remarkable exuberance in the markets. Now, plenty more, of course, ECB coverage on Bloomberg TV at 12:30 p.m. London time. We'll also hear from the central bank's vice president. He's Luis de Guindos. Now, we look at, of course, the FOMC minutes. We'll look at inflation expectations. We'll look at everything that's going on with Bitcoin as well. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kailey Leinz out of New York. We have market analysis. We look at Bitcoin. And, of course, we look at inflation. All of that coming up. This is Bloomberg.
The jobs plan, taken as a package, will enhance the net profitability of our corporations.
The vaccination is taking hold, and you're definitely seeing a change in the customer behavior.
If you had asked me a couple of years ago, would we have this kind of demand, whether you're talking about PCs or gaming products or the data center, I would have been surprised.
This is Bloomberg Surveillance Early Edition with Francine Lacqua, Matt Miller, and Kailey Leinz.
Well, good morning from London, Berlin, and New York on this Wednesday, May the 19th. Our top stories today. Bitcoin goes from boom to bust. The cryptocurrency has now erased all of its gains since Elon Musk's first big embrace. The axe falls at UBS. Hundreds of jobs are being cut at the Swiss bank as part of a restructuring plan. And it's worse than you think. The chip shortage that has slammed manufacturers has now entered what's being called the danger zone. Kailey, when you look at the danger zone, we also had a warning from the ECB looking at stability and actually saying that some of the market valuations in the U.S. could be a worry further down the line. But for the moment, the ECB not concerned about crypto at these levels.
Yeah, the question is, are they concerned about inflation, Francine? Because the equity market at least seems to be today. There is a lot of red on the screen for equities really across the world, and that was true in the Asian session. Granted, Hong Kong and South Korean equities were closed today for holidays, but in Japan, China, and Australia, they were all lower. Actually, the Australian benchmark had its worst day in about 3 months. In foreign exchange, the Japanese yen is weaker against the dollar, as is everything in the G10 space. Right now, the yen sitting at 109.09. And then I don't usually talk about Bitcoin in my check of the Asian markets, but I am today because the PBOC, the central bank in China, issued a warning on cryptocurrencies yesterday. And that is a huge part in what is dragging on Bitcoin and its peers this morning. Bitcoin was below $40,000 earlier in the session, just above that now, but still down about 6.5%. As for what the picture looks like here in the U.S., no surprise with the losses we're seeing in equities across the world. Futures are pointing to a lower open. Right now, S&P E-minis off by around 31 points, but it is a bit of sell everything today in that there's also selling in the bond market. Yields moving higher 2 basis points on the 10-year to just around 1.66%. The dollar is broadly stronger today, snapping a 4-day losing streak, though we're just coming off the lowest levels since January. And finally, crude is below $65 a barrel. WTI at 64.48 right now. You have inventories building here in the U.S., but also the potential of an Iran nuclear deal, which could mean more supply is coming back onto the market, Matt.
All right, definitely going to be watching those crude prices. And, of course, I'm concerned about the danger zone as well for chips. I want to talk about inflation right now, and actually inflation that's happening here. We just got some headlines crossing. You can see those on the Bloomberg terminal if you type, well, EcoGo is one way. I like WecoGo, W-E-C-O Go, because then you can pick from a range of colorful flags. European CPI year over year, bang in line with the estimate, 1.6%. The month-over-month figure also in line with the estimate at 0.6%. The core figure a little bit weaker than the estimate. On a year-over-year basis, 0.7%. We were looking for 0.8%. So inflation is there. It's not quite as strong as maybe the market had anticipated, and it's also really not a lot to write home about, but it's better than deflation, I guess. Take a look at what's going on in markets across Europe. We have red on the screen, and you know, if you type in GMM Go on your Bloomberg terminal, you see a sea of red as well. It is definitely a risk-off day. From the Iberian Peninsula to the boot of Italy, the core of Europe, and even the UK, which has left the European Union. Everything is selling off. Take a look at some of the individual moves. I thought very interesting to see the pound coming down, the dollar really just shooting up against everything, but the pound is one of the most pronounced moves because it had been up earlier, so now it's back down. German bonds are closer to zero, closer to going positive than they have been for over 2 years now. So I think that's pretty interesting as well. And then Ferguson, one of the biggest gainers on the S&P, the stock 600, one of the biggest point additions as well, even though it's not a huge company. It's only a 20-some billion dollar company, $25 billion company, but Ferguson makes stuff to build homes, and we know that house building is a hugely, well, there's huge demand for it in the U.S. It's been tough to meet the supply, as we saw in the numbers yesterday. In the UK also, very big demand, tough to meet the supply, and that's why margins are huge at a company like Ferguson PLC, and that's why it's one of the biggest gainers, Fran, on the FTSE 100.
Yeah, Matt, I guess when you're stuck at home, everyone's thinking of DIY home improvement. And the other thing, so Weco, I'm a huge fan of it as well. It's particularly useful to teach flags to a 9-year-old during lockdown. Now, a look at what else is ahead today, and New York City reopens with capacity on restaurants, theater, stores, and museums ending. Now, it's another big day for retailers with Target, Lowe's, and TJX reporting earnings. And then a little bit later, the IEA crude oil inventory report. That will be folded into what we know or we don't know about the nuclear accord with Iran. And then at 2 p.m. New York time, it's the big one. The Fed publishes its minutes from their April meeting. And my only prediction, Matt, is that probably inflation angst will be back with a vengeance on the markets.
inflation angst hasn't really been helping Bitcoin at all. You know, if you look at the hedges, traditionally gold has been the hedge, right? And Bitcoin had been crushing gold as an inflation hedge, or at least it looked like it. Now, if you look at some point during this program, I'll show the Bitcoin to gold ratio. It was soaring, and now it's dropping big time. The question I have is, what do you do in case of inflation? Do you buy cyclicals? Because those may turn over too in terms of stocks. Gold hasn't proven to be such a great inflation hedge. Or maybe inflation is just going to be transitory, so you won't need to worry about it for very long.
Yeah, or maybe just get out of equities. The million-dollar question that we'll try to get to the bottom of. Now, Bitcoin now erasing all of its gains since Tesla's announcements in February that it would accept the cryptocurrency as a form of payment. The latest blow, a warning from the People's Bank of China. They said virtual currency is not real currency and should not and cannot be used in the market as money. Let's bring in Bloomberg's Danny Berger. Danny, we're below 40,000 or just above 40,000, but it went below 40,000. What I don't understand is that, I mean, there was kind of acceptance that China was never going to get behind cryptocurrencies.
Yeah, definitely. Well, if that's the case, and this is kind of just a reminder on that front, maybe what we're experiencing now is this very downside bearish type momentum. And momentum in these types of technical indicators are so important for Bitcoin because, look, it's not something that you can really trade fundamentals around. Sure, you can have a catalyst, you can have Elon Musk tweets or the PBOC, but when we look at what Bitcoin is doing, so hopefully I can dive into my terminal to show you this. Bitcoin earlier was dropping below its 200-day moving average. So that's this purple line on here. It is now back above it. It's now back above that psychological $40,000 level. Now, analysts have said, look, if it drops below 40,000, it could be 30,000 next. There's enough volatility in this cryptocurrency that we could do that. Now, of course, the bulls of Bitcoin would say this is just a buying opportunity, and maybe that's why we've seen some of these losses ease as we get closer to the U.S. session. Now, before I had the screen up here that talked about the Bank of America fund manager survey that was out yesterday that had Bitcoin as the biggest long. I guess one of the questions is, are we going to see people start to capitulate? This hasn't necessarily before meant for Bitcoin that people run out of it, but Vonda Research did publish a note today that said, looking at the exchanges, that it looks like retail is starting to capitulate, and that certainly would be a worrying turn for Bitcoin, Matt.
You know what? Tom Keene kept telling me around 60, 65,000, he was saying, I need an entry point for Bitcoin. Where am I going to find an entry for Bitcoin? And if this isn't that, then I don't know. We're going to have Tom on later on the program. We'll ask him. Danny Berger, thanks very much for that. Let's talk about bankers' jobs. UBS has started a broad round of job cuts across its largest divisions. It's part of a restructuring plan intended to save that bank $1 billion over the next 3 years, but not good if you work there. Let's get more from Bloomberg's Wall Street reporter Sonali Basak.
Hi, Matt. Yeah, it's pretty amazing, right? Because you have Ralph Helmers coming in first year on the job. We knew that these cuts were coming to some degree, but now we finally know how many there are going to be. And these 700 positions are on top of existing job cuts. So, of course, they cause jitters, but at the same time, we saw them coming. And we see it coming as UBS also thinks about spending money in other places, like technology. So balancing these two things really starts to create a different outlook for the bank and how people think about jobs, but also probably how investors start to think about UBS and other banks that are starting to adopt more technology as part of their profile.
Chanel, there's also personnel moves at JP Morgan. Yesterday's leadership shakeup has pushed two women into the front of the field to take over one day from Jamie Dimon. Now it elevates current co-president and COO Daniel Pinto to become sole president of the U.S. Bank. I sat down with him for an exclusive interview at the end of April, and we discussed how he handled stepping in for Dimon as an emergency co-chief executive. Have a listen.
Gordon and I ran the company for a couple of months while Jamie was in hospital, and it was not any other 2 months. It was at the time where we were making the decisions to move the company to work from home, all kind of stress situations. And we did well. And then Jamie came back as strong as ever. But we learned a lot. And we learned a lot about how to manage the company in stress times and how people behave. So you see people under stress scenarios behaving in one way to the other. So you see what you need to work with those people that may be leaders of these companies in the future to really prepare them for this type of environment. So it was a fascinating time, very stressful, and we are very glad that Jamie's back and healthy to stay working with us, hopefully for many years.
Daniel Pinto there speaking to me last month. When we look at some of the things that we need to follow, Sonali, does it really mean that this is a clearer sign that actually Jamie Dimon is now looking for a successor?
Well, listen, right, Francine, we know that these three executives, Marianne Lake, Jen Pisak, and also Daniel Pinto, they have been in the succession line for a very long time. What it does is it takes Gordon Smith into retirement and it elevates these two women into a clearer line of succession. So it really is just a progression of what we've seen over the last couple of years. But remember, we've seen this story at J.P. Morgan how many times? Almost, actually none of the executive team at 2008 is at J.P. Morgan anymore. So the whole team now has turned over, but you have the proteges all over Wall Street. You have Bill Winters, you have Jess Staley, you have Charlie Sharp, all graduating into into CEO roles at other banks. So we'll see what becomes of these two women at the end of the day, which one of them ends up taking over J.P. Morgan. If Jamie does step down earlier, we know that Daniel Pinto will obviously be ready there to take over. He's stepped up before, right? Last year even. So we'll see where this ultimately ends up. But at the end of the day, Jamie has not given anybody a timeline yet, or at least a finite one.
Well, we know you will be on top of it for us, Sonali. Bloomberg Wall Street reporter Sonali Bostic, thank you so much. I do want to take a quick check on some stocks moving in pre-market trading here in the U.S. No surprise with futures lower, a lot of stocks are moving to the downside. One of them is AMC, and if it does indeed open lower today, it would be its first down day after an 8-day winning streak. It's down about 4% in early hours. Some of that meme stock momentum may be waning. Another stock moving to the downside is Tilray. It also is lower by more than 3%, or around 2.5% now, off of session lows. It is closing a facility in Ontario. That may be weighing on sentiment a bit. And finally, I wanted to point out Freeport-McMoRan. The materials and the miners have been having a really good run of it lately as commodity prices have gone higher, but copper losing a little bit of steam today, and that is weighing on shares of that stock, which is lower by about 3% before the bell, Francine.
Yeah, a lot going on today. Coming up, Kailey, we'll speak with Max Kettner, HSBC multi-asset strategist, and then a little bit later, an exclusive interview with the Atlanta Fed President, Raphael Bostic. That's at 11:30 a.m. in New York, 4:30 p.m. in London, and this is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kailey Leinz in New York. Now, the dollar is really on the move today, and for now, we're looking at it bounce a little bit. But the interesting trend has been to the downside, and Dan Curtis, my producer in New York, has put together a brilliant chart to show us this. For those of you listening on radio, welcome on London DAB Digital, I presume. What we're looking at is a dollar against a basket of other currencies that is bouncing down against a resistance line. Now, if it comes through this level at 11.17, it could approach the lowest level we've seen since back really in 2014. So really we're looking at the possibility of 7-year lows here on the dollar. And Fran, that has so many implications for risk assets that our investors, viewers and listeners hold, regardless of what they may be.
Yeah, and it goes also back to really one of our top stories, the ECB, Matt, also warning of financial stability risks amid this market exuberance. So joining us to talk about market exuberance and otherwise, Max Kettner, multi-asset strategist at HSBC. Max, where do you see market exuberance?
Look, I think from a sentiment and positioning perspective, actually positioning indicators that we track have become less exuberant in particularly the last month. So things like, let's say, equity betas, survey-based sentiment, for example, also in volatility futures curves in equities, they've gone actually less exuberant. Where we do see more exuberance is around growth expectations. So we looked at, for example, at the breadth of surprises, for example, or looking at the breadth of GDP expectations globally over the last couple of quarters, that has become very, very positive. And typically what we see is that activity surprises, so the extent to which data surprise against consensus expectations, that typically has sort of a 2-quarter lag against the 2-quarter ahead growth expectations. And that's really where we see at the moment quite a bit of exuberance, because if we look Q2, Q3, Q4 expectations, particularly in the US, they've been raised to an enormous degree. So that is, I think, the exuberance, not so much on the market side, but very much so on the fundamental, on the macro, and on the growth side.
Well, and along with the growth exuberance come the inflation worries, Max. We've been talking today about what you should do to hedge inflation. Bitcoin seems to have washed out on that front. Gold hasn't been as impressive as it has in inflation scares of the past. And many analysts have been telling us equities are a great way to hedge against inflation. They always do. But they've been saying cyclicals may be the way to play it. Now I'm seeing cyclicals turnover as well. If I look at European automakers, for example, they're coming back down. What do you think in terms of an inflation hedge? What are you telling clients?
Look, I think if you do believe that inflation is not transitory and if it's sticking, which is not our view, but if you do believe that, I think gold is still quite a good hedge, because effectively what you're seeing in gold is it's the inverse of real yields, right? So effectively what we would be seeing is the Fed pushing back against this notion that inflation is sticky, it's just transitory. Repeat the old story all over again. And that would then mean actually real yields have further to decline as inflation expectations rise further. And that would then be quite good news for gold. In equities, it's not broad equities, because it can't be, because there is so much in tech, so much in growth and in quality stocks. It has to be the sort of probably the financials, the energy, mostly I would say financials, because as we see steeper curves, that would then really help financials. But that really only applies in an environment where you think that inflation is sticky, and we don't believe that at all.
Is that why you're pulling back a little bit on the cyclicals, Max? What's the thesis there?
Yes, 100%, 100%. I think if we look at inflation expectations, market-based inflation expectations, both on the swap and on the cash side, really what you have seen over the last couple of years has been an enormous correlation with base effect and energy prices. And if we look at, I'm sure you've talked about this a million times with other guests as well, we all know that these base effects are now kicking in. We know that this is now the peak. So to us, it's always been around the middle of Q2 where the peak in those base effects and the peak in growth euphoria should be coming through. So it's really the growth euphoria that makes us being a little bit more cautious on the cyclical side, and also the sort of maximum inflation concerns around the base effects and the transitory nature of inflation.
Max, thank you so much. Max Kettner. It is a conversation we've had and we'll continue having, multi-asset strategist there at HSBC. Now, coming up, today is day 3 of the Bloomberg Business Week Summit. Our lineup of guests include the former Yankees star Alex Rodriguez, ARC founder Kathy Wood, Binance chief executive for the U.S. Brian Brook, and the Atlanta Fed president Raphael Bostic. It all starts at 10 a.m. in New York, 3 p.m. in London, and this is Bloomberg. This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now let's get straight to the Bloomberg. First word news on no sign of a let-up in fighting between Israel and Hamas militants. Now, Israeli airstrikes on the Hamas-run Gaza Strip continue. Meanwhile, Hamas keeps firing rockets into civilian areas of Israel. Now, Israeli media report that Egypt has proposed a truce starting on Thursday. Hamas is said to have agreed. The White House says it's encouraged by talks with Republican senators on a major new infrastructure package. The lawmakers sound less optimistic. They say the session led to no agreement on a spending figure or how to pay for it. Now, Republicans say they could go bigger than their first $568 billion proposal. President Biden is proposing $2.2 trillion. And we've got the answer to possibly everything you want to know how to do. It's in the latest edition of Bloomberg Business Week, the how-to issue. Well, we talk to experts ranging from movie directors to venture capitalists. Among the questions we try and answer is how to grill a cheeseburger. Very useful, especially as we go into the summer months, how to get wealthy Americans to pay their taxes, and how to land a rover on Mars. So that's essential reading, plus a lot more. It's all in the new Bloomberg Business Week. This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now, there is quite a lot going on in the markets. Matt, a lot of the focus, of course, is on Bitcoin, and then it's always a specter of inflation that never really, steers away from the market anxiousness.
Yeah, there's definitely some action in cryptos. We're approaching a big round number, and that's always interesting. And on the way down after going up so high, it gives a lot of people a chance to say, I told you so. I still wish that I bought a lot of Bitcoin at like $100, $200. It's the kind of thing that keeps me up all night. Nonetheless, I think inflation is probably a more prescient concern for most people in these markets right now, especially considering, that these commodity shortages, Francine, these shipping problems, this labor shortage, all of that's contributing to a rise in prices that I can't see how that's going to be transient. But maybe I just don't have the outlook that Jerome Powell does have.
There's a wonderful, actually, piece on the Bloomberg terminal saying, this is all the things that the world is lacking of or we're in shortages of. And Kailey, that's really playing out in the markets.
Yeah, it is, Francine, in that pretty much everything is getting sold today. Literally everything I'm about to show you or tell you about in this market check is in the red. That applies to equities. We have stocks off of session lows in Europe. We're down, though, still the better part of 1% on the stock 600. And here in the U.S., 4 hours to go until the opening bell, and futures are pointing to a lower open. It is big tech that looks like it will underperform. NASDAQ 100 futures off a full percentage point. That likely has to do with the fact that yields are also moving higher. Investors also selling bonds. We're up a little more than 2 basis points on the 10-year Treasury to 1.66%. And then, of course, also selling Bitcoin. Blame the PBOC, blame Elon Musk. Whatever the reason, we dipped below $40,000 earlier in the session. We are trading right now around $40,200, but still down about 7%. And no surprise, with those declines in Bitcoin, a number of crypto-tied equities are moving lower in pre-market trading. We're down more than 7% for the likes of Marathon Digital and Riot Blockchain. Coinbase is down by about 3.4%. And then, of course, Tesla is involved in this equation, Matt. Is it selling Bitcoin? Is it not? Maybe there's still some question marks that Elon Musk has left on the table, but nonetheless, that stock is moving lower by about 2%, Matt.
I'm glad you bring up Tesla because I have a chart showing car makers. These are European car makers, and right now, Tesla doesn't count as a European car maker, although they will start building cars in Berlin very soon, or right outside of Berlin, out by the new airport. What you're looking at is a chart entitled Shift into Reverse. And for those of you listening on radio, I will tell you it shows European automakers coming up against a ceiling and dropping back down. A little bit of technical resistance here that we've seen over the last 7 years. We've hit, it seems, that point again. So European automakers that have run hard, mostly, Kailey, because of their ability to emulate Tesla. Volkswagen wants to be and overtake Tesla as the biggest electric car maker in the world. We'll do that soon. But the stock prices are starting to roll over, partly because of the semiconductor shortage that's holding them back, Francine, from selling more cars.
Yeah, now with the semiconductor industry facing a global chip shortage, one company in the eye of the storm, of course, has been experiencing a meteoric rise. It's AMD. At the helm of the engineer turned chief executive, Lisa Su, who transformed the company from an also-ran to a chip powerhouse. Now, on the latest Studio 1.0, Bloomberg's Emily Chang sits down with the chief executive to discuss AMD's impressive comeback story and the road out of the chip shortage.
I don't remember a time in this industry when it hasn't been competitive. What I will say, though, is I'm really, really pleased with our, what we've been able to accomplish. I mean, it's fun to be able to say that, we have, really driven, the direction of computing in the industry. I mean, it's fun to be able to say that. And if I look at, some of the things that we've done over the last 5 years, we've really, changed, sort of what people expect from high-performance computing. So I would say it's a competitive world, and we're going to be very competitive in the process.
Well, catch more of that interview today on Studio 1.0 at 5:30 p.m. and 9:30 p.m. in New York. Now, the chip crisis continues. Shortages in the semiconductor industry are getting even worse as users are getting more desperate to secure supply. The gap between ordering a chip and taking delivery increases to 17 weeks in April, which is the longest wait since the data first started being tracked in 2017. Now, joining us for more on this is Matthew Bloxham, who covers the media sector for Bloomberg Intelligence. Matt, we talk about a danger zone. So apart from everyone wanting to mime and sing, dodgy songs that start with danger, what does it mean? Is it more industries being affected, or just the waiting time really being at almost breaking point?
Yeah, I mean, I think it's quite a complicated picture. I mean, I think it depends a little bit on how big or small you are as a customer. I think smaller customers are, reporting lead times of over a year. And I think it also depends what industry you're in. Matt was talking about auto shortages. I think they're definitely down the pecking order compared to the kind of big consumer electronics products manufacturers like Apple. So there's quite a lot of things for some of these, certainly the automakers do, to look at their supply chains, how they've historically sourced chips, cutting out the middleman, going direct to the manufacturers, getting different supply in place. So it's, a complicated picture. And I think, that kind of 17-week figure you mentioned, that there's a big spread around that, depending on who you are.
Yeah, I want to point out also that Matt Bloxham covers more than just media, also obviously technology. He covers the chip sector for us and telecoms, which are, reliant on this. Such a huge industry, Matt, and so important to government as well. What's being done to try and curtail this chip shortage?
Yeah, a lot of things. I mean, we've already seen that the U.S. has committed $50 billion to develop U.S.-based chip manufacturing. The European Commission's a little bit slow, but they're also looking at projects to develop in-region supply. And some of that will be with local manufacturers, but Taiwan Semiconductor is working to develop factories in the U.S. So I think that's the main thing. I think is going to be diversifying supply into new regions and just generally ramping the amount of production. But these factories cost a huge amount of money, tens of billions of dollars, and so I think that you have to be very sure about the investment before you hit the button.
Right, and that makes the case that this is a very difficult problem to fix, Matt. So especially when we're trying to tie this into the inflation conversation and whether or not it's transitory, how long can this last?
I guess potentially, maybe a good couple of years, because the lead times on new factories are long, and you're only seeing demand for chips go up and up and up from every industry. People are demanding more smartphones. Smartphones are needing more complex and more chips. Autos are demanding more chips as we move towards EV, 5G. Everything about 5G needs more chips. So, demand is going up. I think supply is going to struggle to match that for quite some time, to be honest.
All right, Matt, thanks so much for joining us. Matt Bloxham there, Bloomberg Intelligence Tech, Telecom and Media, TMT is what we used to call it, analyst for us. Meanwhile, Tesla demand has been slipping in China, adding more headaches for the car maker, for Elon Musk. Let's get more from Bloomberg Europe Autos editor Craig Trudell. And of course, not just experience in Europe. Craig's been all over the world, from Detroit to Tokyo for us. What are we seeing right now in Beijing, Craig? Why does Elon Musk have more problems in China?
Yeah, he's been on a bit of a rough run recently. We had the Shanghai Auto Show a few weeks back where there was a customer who staged a sort of embarrassing protest for the company, and that's really put a lot of focus on, quality issues for Tesla and led to a lot of sort of, back and forth between the Tesla communications team over there and some state-run media that have been highly critical of sort of, the initial downplaying of that incident and the sort of attempt to clean up after it over the last few weeks. It's hard to parse at this point, just how much all of those factors are sort of maybe contributing a little bit to the registration drop that we saw in April. We definitely see it's very common for Tesla to have, really strong months at the end of their quarters, and they definitely had that in March. But this wasn't just a big drop off from March. This was, an April where we saw sales actually slip, below where we were seeing late last year and early this year as well. So, something to watch over the coming months, just how much this decline sort of sticks and potentially how much the company is able to sort of, navigate its way out of this rut it's been in recently.
Yeah, how much, it attracted some pretty big unwanted publicity, Craig. I mean, how does Elon Musk put it back on track?
Yeah, I think the sort of downplaying of customer concerns was a mistake that I think the company has cleaned up after. I think they sort of have realized that they need to be a little bit more sort of humble in their communications so that they don't come off as dismissive. That's important. I think there's a lot of sort of conspiratorial thinking too, even about China having some concerns about Bitcoin and just how much is some of this even being driven by the government being concerned about crypto and Elon's sort of infatuation with that over the last few weeks. It's really hard to tell whether there's any there, but what we have seen is a lot of attention on crypto, a lot of maybe a bit of distraction on the part of Musk as well. I mean, you could argue that the SNL appearance, the timing was not great, just given some of these execution issues that the company has been having recently. So
right.
I guess just generally kind of eye back on the ball.
Well, Craig, I want to pivot to a different part of the world because, of course, we saw a pretty remarkable number on European auto sales earlier this morning. When it comes to Europe and Germany in particular for Tesla, Elon Musk reiterated yesterday he wants to start production there by the end of the year. Is that really realistic?
It's going to be really challenging for him. I think, the company went from, targeting around July to end of this year to hopefully end of this year. I think, in parsing Musk's most recent comments, I think, you sort of hear him kind of in saying that, alluding to the idea that it's not a sure thing. I think, the fact that the company has already been having some issues getting sort of paperwork signed off on. There's some bureaucratic issues in Germany that, the Berlin airport that was referred to earlier, folks who followed that story are very familiar with. I think this is a situation where EV sales in Europe have really taken off, and it's a real opportunity for Tesla to take advantage of that if they can start up local production. But they keep sort of changing their approach to getting sign off for this project, and that's only going to sort of hurt their cause in terms of being able to get production going.
Craig, thank you so much for the insight. Bloomberg's Craig Trudell there looking at automakers for us across the board. Now, coming up, the crisis in Gaza putting the Biden administration in a bind. We'll have plenty more on that next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, European Central Bank Vice President Luis de Guindos. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now, Russia is dialing back reports of a major breakthrough on the nuclear deal with Iran. A senior diplomat says that while significant progress has been made, unresolved issues still remain. Well, joining us now for the latest on this is Rosalind Matheson, Bloomberg's executive editor for international government. Ros, we have a lot to talk about in the Middle East. But first of all, when it comes to the Iran nuclear deal, I mean, how likely is it that we'll get something substantive soon?
We did have those reports yesterday that indicated something was imminent, which were later walked back. A bunch of diplomats in Europe and elsewhere telling us that that was a bit over the skis. That said, we're facing a May 22 deadline on the interim inspections agreement between Iran and the IAEA, and there are talks ongoing in Vienna today related to that. So what we might get, if anything, this week is an announcement that there's going to be an extension of that deadline. Of course, Tehran has been expanding its enrichment activities in response to the penalties that were imposed from the Trump administration. But that's only one aspect. The broader issue is actually restoring the 2015 accord entirely, with the U.S. coming back into that agreement. And it appears we're still quite some way from that. This fear from the U.S. and elsewhere is that there are still significant differences on both sides. Also, for Iran itself, of course, pressure to retain a hard line going into elections there pretty soon.
Speaking of hard line, that's what President Trump represented, I guess, in a pro-Israel way. Is there concern that, with Biden coming into office, Hamas feels they can more easily make these kind of attacks, and Iran will feel less under pressure from the U.S.?
Certainly there's the question of the role in Hamas in all of this in recent days, complicated by the fact that it's labeled a terrorist organization by the U.S., and that means the U.S. can't actually directly negotiate with it. They're generally going through the Egyptians who have played that role in the Middle East for many years, and the U.S. can't be a central mediator, of course, because of that. There's also suspicion, of course, because the U.S. under Donald Trump drew very close to Israel for a number of years, that can the U.S. be an honest broker in all of this when it comes to the Palestinian side? So those are some of the complications that are overarching the current push for a ceasefire between Israel and Hamas. And of course, you still have Hezbollah potentially coming into that equation as well.
Well, of course, the U.S. has expressed support for a ceasefire, Roz. Why is that all the Biden administration feels it can do here?
Well, for one thing, because, again, they're not able to negotiate directly with the Palestinian side, although they do arguably have a lot of capital and the ability to lean on the Israeli Prime Minister, Benjamin Netanyahu, pretty hard to do so. But also Biden has pressures at home to consider within his own party about how hard to go on Israel and how hard to push Israel on this. He also has a bunch of domestic considerations that really are drawing his attention at the moment. Some of the packages he's trying to get through Congress, questions of dealing with China, a potential summit with the Russian president as soon as next month, the G7 summit coming up in the UK in just a few weeks. There's a lot on his plate at the moment, and particularly with China, a focus on that. So it's like adding this to his list of things to do right now, because if you take the lead, then you own the responsibility to resolve it in many ways. And it's clear that for Biden, that's just not a number one priority at the moment.
Ros, thank you so much. Bloomberg's Rosalind Matheson there talking about the Middle East. Now, coming up on Balance of Power, Richard Haass, Council on Foreign Relations Presidents. He'll have a thing or two to say about political stability. That's at 12:30 p.m. in New York, 5:30 p.m. in London. And this is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now let's get straight to Tom Keene, co-anchor of Bloomberg Surveillance, who joins us. Tom, there's quite a lot going on in terms of inflation expectations, of course, the central bank and what they'll do. But then I know you'll also be focused on UBS and all of the banking sector and then folding into that crypto.
Yeah, you're going to see a lot more UBS. I think with the better news here on the pandemic, you're going to see banks trying to get back to what they do best, which is cost cutting. I do have to focus on the markets, and we'll do that through surveillance this morning, Francine. And there's been a shift. Yesterday was a foreign exchange statement, and today it's clearly within the bond market where we've seen an adjustment in the real yield in the United States. But really, it's about Germany, and of course, all coming up on ECB. The U.S. 10-year yield in white, that big green positive yield for Germany going negative, the pandemic, and then, Francine, the velocity of the recovery in Europe is of note, soon a positive 10-year yield in Germany.
Yeah, Tom, what also caught my eye is really the ECB this morning warning about financial stability because they worry about market exuberance. Where do you see market exuberance?
Well, I don't know if I see market exuberance. I mean, you see Bitcoin. I think Bitcoin is very exuberant this morning. But I think it's an ECB looking at the markets, adjusting expectations, and that means a tightening. That means markets getting out front. But the shift here from negative to positive yield, there's no real analog for that. We've never really seen the behavior changes we're going to see in Europe from moving from a negative yield to a positive yield. We're at an original point. And with Lagarde, it's simple. When the facts change, I change, to borrow from Mr. Keynes.
Yeah, but of course, Eurozone is quite, vulnerable to such spillovers because they've borrowed so much also, during the pandemic. And that is true for a number of countries, also in emerging markets.
It's just the news flow. I agree. The news flow is really lumpy. I was just looking at air travel across the Atlantic, Francine, and it's all great. And at the end of every article, it says, yeah, but we really don't know.
Yeah. Tom, you and I need to do a FaceTime later because I know your puppy needs to speak to my puppy and give him a little bit of tips on how to be a little bit better behaved. I'm looking forward to Bloomberg Surveillance. Tom Keene with also Binky Chadha of Deutsche Bank, co-anchor there of Bloomberg Surveillance, starting shortly. Now, we still have a couple of minutes to see what else we're watching today. And Kailey, I know you're all over the retail earnings.
Yep, more of them coming up, Francine. In about 5 minutes' time, we're going to get reports from Lowe's and then followed by Target around 6:30 a.m. Eastern time. And TJX will be reporting this morning as well. Now, of course, this follows Home Depot and Walmart from yesterday. Both reported really strong results, but Home Depot didn't get rewarded for it because it said stimulus checks did have an effect in the quarter just reported. The question is, what is that effect going forward? Does it wane? And it'll be interesting to see what kind of commentary we get around that for these three companies reporting today, Matt. Also, I always get excited for TJ's earnings because I'm a Maxxinista. I love TJ Maxx, so I always look for that.
Do you know, interesting piece of trivia, TJ Maxx, and I've been known to hoard there on occasion. Here in Germany, it's called TK Maxx.
What?
There's no reason. I don't know why. Yeah. TJ, that's a name. You call someone TJ. Nobody calls anyone. I guess Tom Keene could be TK.
Tom Keene is
I am
TK.
watching mortgage applications. As you may or may not know, I'm desperately seeking a place back in Westchester. Hopefully my wife isn't watching right now. I want to move back to the United States of America. But it's going to be difficult to get a jumbo loan. I'm watching mortgage applications. They're coming out in a little bit, and it doesn't look good. It doesn't look good for the Miller family right now.
I mean, so much information there to process. We need it's lucky that we have another show tomorrow to discuss your move, hoping that your lovely wife is not watching, at least some days. All right, there's a lot going on today. It's after the minutes, of course, from the Fed. Coming up in the next hour, Ron Temple, Lazard Asset Management, co-head of multi-asset. This is Bloomberg.